Welcome back, everybody. Time for today's three-stock lunch here with our trades. Jerry Castellini, President, Chief Investment Officer with Castle Ark Management. First up, let's go to Tesla. Wall Street continuing to cut price targets on the stock. Fresh round of warnings on the first quarter deliveries numbers. EV manufacturer, one of the very few underperformers among big tech stocks so far this year, down about 27%. Jerry, your trade.
Yeah, so Tesla, I would put in the same category as Apple, two worst performers of last year's Mag 7, and they're actually been kicked out. So there certainly isn't a lot of excitement there anymore. And when you think about it, both of these stocks have kept away from investors their real strategy and what they're doing in AI. If we knew more about them, it would be easy to conclude that both should stay as underperformers. But think about Tesla for a minute. The expectations now for deliveries have been cut. China is not a surprise on the upside anymore. It's a big negative concern. Stocks pulled in. They just raised prices, so that market might be stable. But more importantly, they're most likely going to have a very scary on the upside announcement at some point on their AI application, and it'll be wrapped around this self-driving aspect that they've developed. We don't know if it's going to come soon, but we would very much expect something here in the next maybe even 3 weeks, just hinting at where they could go. And you would not want to be on the wrong side of Tesla when they're now applying that type of technology to on-the-road driving.
So you think you would say buy this here in light of the fact that you think something's coming big on AI?
So from a tactical perspective, I would let the quarter come in the next few weeks, let them report, let them give you potentially more bad news, and take that as my entry point. We don't own it right now. We're looking at it very closely. And if we see any more weakness in it, given the upside that they have, that would be a great time to start buying. So I'm a hold. Okay. We're going to your earnings and buy regardless.
This was Jerry Castellini's opinion on Tesla stock, but we honestly have to disagree with his opinion on Tesla's AI developments. Tesla has, in fact, indicated what it's doing with AI, and the most recent news about Optimus will completely prove Castellini wrong.
The soul of NVIDIA, the intersection of computer graphics, physics, artificial intelligence. It all came to bear at this moment. The name of that project, General Robotics 003. I know, super good. Super good.
After this NVIDIA reveal, people started to wonder about where the Tesla bot was, as well as the company's current progress on it. In order to answer these questions, we need to go through Tesla's careers page and see what type of jobs the company is posting. A few weeks ago, Tesla has hired hundreds of jobs for the design and manufacturing of the bots, and the company even had a job opening for a program manager whose role is to run pilots in the factories. Now, Tesla is hiring for 5 more roles, including a technical writer for creating comprehensive and user-friendly documentation for Tesla's robotic systems, including service manuals and troubleshooting guides for the company's robotic products. Not only that, but Tesla is also hiring engineers to assist with the developments of 5G capabilities for new vehicles and Optimus as well. Many companies now are coming out with and revealing humanoid robots, and a lot of them have really great demos, but the only company that's actually made a lot of strong progress with manufacturing is Tesla, and these hirings prove this, as well as the fact that the company has a specific roadmap for its robots. You might remember that around a week ago, we found out that Optimus was ready to be used in field trials in Tesla's factories through another job posting that said the company was looking for an engineer who would drive the deployment of robots for trial applications and execute pilot applications of humanoid robots in various manufacturing environments. And this shows how important it is to track the company's current job postings, because they might tell you a lot about Optimus and what's coming next for it. One of the new roles that Tesla is hiring for is a project manager role, and whoever gets this role will be responsible for leading the development and optimization of in-house software tools for the robots. And this is extremely great news, because it shows that Tesla is committed to creating the software for its robots as well, not just the hardware, and this, in turn, indicates that the company's AI technologies are extremely advanced, unlike what critics are saying. But the company isn't just developing Optimus software and hardware, but it's also bringing all the ways it makes all of that software and all of that hardware in-house, and that's what differentiates it from a lot of bot companies. For example, Figure AI isn't exactly designing the manufacturing lines that will produce its Figure robot in the long term, and it's also not developing the core software, as it gets that from either NVIDIA or OpenAI. This is what allows Tesla to be more cost-efficient with its bots, so it can price them better. In fact, Elon Musk recently went on Twitter to talk about the pricing of Tesla bots, saying again that he expects them to cost less than half of Tesla's cars, and replying to another tweet, saying that Tesla's humanoid robots will cost less than $25,000 to $30,000 over time. In other words, many bot companies can develop hardware and software like Tesla does, but they don't have the same level of vertical integration, and these job postings prove that we've reached a certain point of maturity for the Optimus program that's beyond what a lot of competitors are doing right now. Hello everyone, and welcome back to Tesla Tomorrow.
You've been very bullish on autonomy,
Yes.
vehicle autonomy, of ETF all around it, robotics and the like. What do you make of what's happened with Cruise?
Yes.
The shutdown of Cruise, at least the temporary suspension of it. Derek Khosrowshahi, who runs Uber, was on the broadcast last week. He said he doesn't think that autonomy, in terms of autonomous vehicles or robotaxis or the like, are a real thing for another 5 or 10 years. Meaning, and by the way, I think 5 or 10 years ago, he would have said 5 or 10 years ago, that was what,
And so would Elon, yes.
And so here we are.
Yes.
So what have you changed your view about that?
No.
I mean, you must have, because I imagine if we go get tape of a conversation that we all probably had 5 or 10 years ago, we probably said 5 or 10 years from now.
22, 23,
Right.
24. We actually delay ours by 1 year relative to Elon, so maybe it should be 2 years. But here's where we've learned how important Tesla's proprietary data is. It's 5 million robots around the world. Cruise didn't have anything like that. It had hundreds. 5 million robots around the world collect data every day and send it back to Tesla. Tesla has more corner cases, which means disengagements, accidents, information like that, than all the other companies in the world combined. And I have to tell you, watching the breakthroughs in AI that we are seeing, they are astounding, the speed at which this is moving.
Right.
So it is interesting. I think it's a data issue. Autonomous taxi platforms are the biggest AI project in the world, and therefore we think Tesla is the biggest.
But you have sold, you've sold Tesla shares, and it's, it used to be the #1 holding, I believe, in your ETF. It's now #3. You've sold about 20 million shares.
Yes.
Why?
So, well, whenever it goes up, it was up about 150% relative to our other names, many of which had not moved. So we will always recycle that way, take profits. And I would also say, listening to Elon on the last conference call, he's very concerned about the economy, as we are.
Cathie Wood previously said that Tesla is the biggest AI play in the market, so how true is that? We all know that Tesla recently started offering free trials of its FSD technology for all Tesla cars in the United States. And we also know that the company has been developing this technology for years now, as it released the first version of Autopilot in 2015, started offering FSD as an option for customers in 2017, and began beta testing FSD in 2020 before launching its first subscription package a year later. This timeline, as well as the free trial, proves how far Tesla has come in developing its autonomous technologies, and while it might take some time for the company to hire new people for the development of its bots and get everything in place, the company just needs to let the Optimus process play out the way it let FSD play out over the past few years, and we might get Tesla bots sooner than we think, maybe sometime in 2025 or 2026. And just like how improvements in Tesla's FSD were apparent with each new update, the newest Tesla bot demo showed a lot of improvements compared to some previous videos of the robots that many saw as a bit underwhelming, which gave it a lot of credibility. Many people might laugh about Optimus now, but considering that Musk vowed to invest more than $1 billion on Tesla's supercomputer, Dojo, to develop it into the strongest supercomputer in the market by 2025, and the fact that this supercomputer can be used in training robots like Optimus to become extremely efficient and smart, the possibilities are endless. And the best thing about the Tesla bot is that Tesla can make money from it via various sources, so there's a massive opportunity in them. Tesla can save money by automating work in its factories using the bots, but it can also earn a lot of money by selling the bots to other manufacturers who also want to automate, but can't build their own technologies to do so. More and more industries are looking for automation, and this creates strong demand for what Tesla is doing. In fact, the global industrial robots market size is projected to grow from $41 billion by 2030. Still, this depends on how many Tesla bots the company will manufacture first, so if it ends up with a few thousand bots by the end of 2025, then it'll likely absorb them and use them for its own operations. But if it can scale them up to tens of thousands and hundreds of thousands, then it can definitely sell them to outside customers for profit. Now let's talk about how Tesla bot would impact Tesla stock. But before we do that, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla.
How about Tesla, which is a name that's down about 30% this year? We know EV demand has been a little uneven, let's say, but your thoughts? Is it still not a great name?
Yeah, Nicole, I mean, this is something you don't want to bet against on a long run. Elon Musk, betting against him is a sure way to lose money on a long-term basis. However, as you mentioned, Nicole, that these EV sales are definitely dropping, and we're also getting a big increase in competition. We see where the company like China is starting to build factories in Eastern Europe. So they're want to move into Europe. They're also talking about moving into Mexico. So, these prices are going to start coming down. It's going to be hard to keep those margins. Again, this is another stock I think we'll probably see some more downside. It's bouncing a little bit here, but I think it's more just bouncing off of on a technical level, but from an overbought level. I'm sorry, from an oversold level. And then I think, again, these fundamental issues that you mentioned will take it a little bit lower. That and the fact that Elon Musk is not the favorite guy around Washington, D.C. right now, and he may feel some more pressure from that area in this election year. But again, on a long-term basis, any more further pullback in either one of these names, any more material pullback, I think is going to present great buying opportunities for the long term.
Yeah, okay. All right, look, I mean, that's worth noting.
Tesla expected to report first quarter deliveries next week. Joining us now on why he's lowering his price target on the stock ahead of those numbers is Dan Ives, Wedbush Securities managing partner. I don't know, it just makes me smile a little bit, Dan. You could be lowering your numbers because the stock's at 175 and your target's 315. That'd be a good reason. We'll get all your other reasons, but that's a good start, I think. But it's a little bit odd. You're going down $15 to 300, and you're keeping an outperform rating. All this sounds sort of, I don't know, too little, too late.
Yeah, look, I mean, it's obviously a great point. Look, we're bullish for Tesla on the other side.
Well, you must be, because you still have a $300 price target.
This challenging
what's that return from 180 to 300 is? So you're still looking for like a 70% return.
Yeah,
right?
and look, we've been here before. In other words, there's no doubt, and we call it out. I mean, this is a code red situation for Tesla. I mean, they are going through some dark days in China from a demand perspective. But Joe, I believe on the other side of this is a company, not just from an FSD perspective, but from volume that could start to get 2.5, 3 million vehicles per year as we go into the next few years. Our whole point here is you're in between two growth waves here. They clearly need to lay out a strategy for investors because this is going to be a rip the Band-Aid off delivery quarter next week, and there's no smoke and mirror about it. And I think right now from Musk, I kind of view it as a fork in the road period to handle the investors through this.
Tesla stock has been down 30% this year, and analysts are downgrading their price targets thanks to lower demand in China and expectations of bad Q1 deliveries. But if you put deliveries aside and focus on this other side of the business, you'd see that this dip could be the perfect buying opportunity. With Optimus, Tesla differentiates itself from other companies who produce robots because Optimus is the only humanoid robot that has been designed and geared for manufacturing specifically, so investors should expect the company to produce it in high volumes and eventually take it to millions of bots per year. But Musk has also hinted at the idea of using Optimus to help people in their homes, so there will be various revenue streams just from Optimus alone in just a few years. In fact, he said in a previous update on the robot that the Optimus is an extremely underrated part of Tesla's business, and demand for it can be as high as from 10 to 20 billion units. He was even confident in saying that Optimus will contribute a lot to Tesla's long-term value. This is why the current dip is a great opportunity for buying Tesla, and even though some analysts are predicting a bad quarter for Tesla, they still said that the stock is a buy once the bad news is out. There's a strong possibility that Tesla stock will plummet if Q1 earnings are bad, so potential investors might want to wait until then before they buy Tesla stock. What are your thoughts on Optimus' expected price tag? Let us know in the comment section. If you would like to know more latest updates about Tesla and the EV market, then go ahead and click on the next video on your screen. See you there.